Good afternoon. This is the video newsletter for buysellshort.com for Sunday, January 3rd. Hope everyone had a very merry New Year's Eve. We just had a fantastic 2009, and we're looking forward to having an even better 2010. But let's jump into the stock charts right now. Here we're looking at the Dow 15-minute chart. As you can see, it does not look very pretty, but most of this drop that we saw on Friday came in the last 30 minutes of the session as the last few lemmings that had their tax loss selling to do ran for the exits, and of course the market makers took advantage of said selling, and we saw that steep sell-off into the close. You can see we've got support right now around 10,400, but we get a better picture on the daily chart. You can see right here on Friday on that close, we closed below the 20-day exponential. And as you will recall, since the July lows, every time we've seen a close below the 20-day exponential, the next day is typically an up day. And given that we had that 80 plus ridiculous sell off there in the last hour on Friday, we're probably looking at a gap up, hopefully, come tomorrow morning. The 20-day exponential has been rock solid support for us. We've seen bounces back. We've got subsequent support down here at 10,265. That is the 50-day moving average. Of course, you know, if you're watching TV, you're hearing all the experts are still very bearish on the market. And as long as we hear the clowns like Art Cashin on CNBC warning about geopolitical events and the market being overbought and ready for a sell-off, we should be fine. It's when these clowns start telling you to buy and putting their rah-rah hats on, that's when you get worried. Remember, they are salesmen. Whatever they do, do the opposite, and you usually do really, really well. But let's jump into stock plays real quick. This is typically the next couple of weeks. They call it the January effect. Stocks that had big sell-offs over the last couple of months on tax selling, that selling pressure is gone, and you usually see snapback pops very easily, nice big moves. And that's what we've been looking for. We saw a lot of those pops start last week. It was a fantastic week, and we should continue to see it going forward this week. DISK is one, Image Entertainment. As I mentioned in the trading alert that went out on Friday or on Thursday, this company was trading around the 60 to 75 cent area back there in late November, early December, and the company came out and said that they were probably going to file Chapter 11, and as you can see, the stock went splat all the way down to 20 cents. Last week, they came out and announced a deal where they got $30 million in financing. They essentially sold the company, you know, diluted it by 92%, but it's better than bankruptcy. And, you know, in bankruptcy, the shareholders would have gotten zero in the company. At least now they at least have a small stake. Stock price still trading at that same level. It tanked to 20 cents on the Chapter 11 warning. There's no longer a Chapter 11 issue here, and here we still have the stock down here at 20 cents. Very cheap company in my opinion. Also, as I mentioned in the alert, the agreement that they did with those financiers gives until January 8th for someone to come in and offer a higher price. So we could see some nice speculation on this stock over the next few days. This is a company that's turned down a couple of buyout offers in the last year. The last one, I believe, was in the 2 plus area earlier this year. So, I mean, we're trading down here. Very, very cheap. Very nice chart. Very beaten up. As you can see, the 20-day exponential is up here at 36 cents. And this is a stock that always seems to snap back to its 20-day exponential moving average. And also, if we do a Fibonacci retracement tool on this one, you see the 38 fib retrace is the 38 cent area. So we're looking for 35 to 38 cents on this one this week. RSI is oversold. We're about to get a positive MACD cross on the stock here. And as you can see, stochastics are in the basement. Also notice that after that initial tank, unbalanced volume has recovered nicely. So this stock is coiled for a very big move this week. I think this is going to be a monster winner this week. So we'll be looking to accumulate this one on any dips under 25 cents. And we should see a very nice up week here. ENCO is another stock beaten down over the last month. We got a nice spike there a couple of days ago up to our first target. Has retraced nicely over the last couple of days, and again on Friday on that tax loss selling, which is now done. We should see this one bounce nicely this week with that selling pressure gone, and we're looking again for a move to 33 cents and 40 cents plus, and that's of course without any positive news coming out. LOOK. This is one of those stocks that's done very well over the last 3 years, averages at 20% pop into the first 2 weeks of January, 3 years in a row. As you can see, the stock has been basing very nicely over the last couple of days. We have a downtrend break in RSI. Volume has been very, very high on this one. And check out the unbalanced volume has just gone vertical while the price has flatlined. We also have a downtrend break in stochastics, but when you see unbalanced volume go vertical like this and the stock price sort of tread water as it has, it typically happens right before a big price explosion. So we'll be looking for this stock to go very big within the next few days. WSTL, another January popper play, averages a 20% gain into January, last 3 years in a row. Breakout is a move over $1.20, and we're looking for a move back to $1.40 plus on this one. RSI up through 50. Stochastics in a nice uptrend, and as well they've broken up through 50. So this one looks very, very good for the next few days. RPC, this is one we've played. I had a nice little pop earlier in the week, but another biotech stock beaten down over the last month. Breakout is closed above the 20-day exponential. That is at 28 cents with rock solid support at 20 cents. We'd be looking for a move to the 38% fib retracement level. That is at 35 cents. You can see all the indicators are coming out of the basement. RSI up through 30 and stochastics up through 20. So this one again is another beaten down stock that the selling pressure that was very evident over the last couple of weeks should be gone, and it should move very easily this week. Same theme here. Mad Catz MCZ. Selling pressure is now gone, and a breakout would be a move above 40 with targets on that breakout 45 to 50 cent area. And you know, these guys tend to do pretty well in January, so we'll be looking for more of the same. HYTM, we continue to sit patiently on this one, waiting for the Blue Cross news that when it comes should go kaboom. Hopefully we get it tomorrow. It'd be very nice. We've been waiting for it now for a couple of weeks. Nice little flag formation here. Rock solid support at 40 cents. So, I mean, it's just a waiting game on this one right now, waiting for the contract news. Big winner on Friday. You know, I haven't really gotten into the winners. We've had so many in the last few days. It would take the whole video just to go over the winners. But one to mention, CXM, 40% win in 2 days. Hit our first target plus some, as I mentioned in the alerts. 3/4 gains booked with supports now trailed to the 20-day exponential at 58 cents. Next target on this one, if you're holding, would be a move to the 80-cent area. Friday also saw one of our other plays, ALN, get a nice little pop there. Traded as high as 37 cents, which is why we booked partial gains on this one. And another beaten down tax selling play that should have rock solid support now at 30 cents, and we'll be looking to, you know, take advantage of any dip opportunities in this in the next couple of days and rebuy positions for a bounce back into the news whenever it comes of them selling their two divisions that they said are valued around $10 million. Our biotech plays did very, very well. Dara, nice big spike on Thursday, but retraced on tax selling into the close. We should see this one. It actually was able to hold its breakout from the previous day and held above the 200-day moving average. So we should see this one bounce back above the 50-cent level tomorrow with the selling pressure gone again. Of course, the market depending. Our other biotech play, TGEN, was looking very, very solid all day. Was trading around 32 cents till right in the last 30 minutes when the market got that big flush. But now the tax sellers are gone. And again, traders should be moving back into these plays that they did their tax lock selling over the next couple of days. Sirius is one we're going to keep an eye on the next couple of days. Chart looks shaping up pretty nicely here, but this could be a play on the Consumer Electronics Show. There's not a whole lot of gadgets coming out this year, but I think Sirius might have some news here with Ford, so we'll be keeping a very close eye on this one this week. So that is it for the video. Again, my favorite play going into this week is DISK. I think it could be a very big winner for us. And that's it for the video newsletter. See you guys in the chat room tomorrow. Goodbye.